Hey guys, Mike here. So yes, that's right. And we have confirmed the bear market with something called the DOW Theory, which I'm going to explain to you. Now you didn't see any, you didn't see any flames or anything in the thumbnail because that's not this type of channel. All right, I'm actually going to explain that to you. I'm also going to show you firsthand. I meant to show you this last week, but I'll show it now. The market can't really do much of anything until the bond market comes and gets back almost normalized or just quits doing what it's doing. And what do I mean by that? When I say yields aren't acting right, I'll show you exactly what everybody's talking about, okay? Because normally, as I'll show you, when the Fed funds rate is paused, which you notice we hadn't had a rate hike since July, right? Yields do not go up. They either flatline or they go down. I'll show you what I'm talking about so you can see it for yourself, as well as we'll get into a lot of the charts because there's some stocks that are hanging on a cliff, okay? And I want to say up front before I say anything else, just because even if a bear market is confirmed, that does not mean there will not be rallies. We just went through this in 2022, and I'm going to show you that on the chart where you'll have these huge bounces because markets don't go straight down for a reason, and markets don't go straight up for a reason. If you saw Saturday's video, you would know what I'm talking about. If you didn't, shame on you. Go watch that video. Now, are you not a member? And so they've seen it multiple times. But again, you have to hunt liquidity. You have to find these orders to fill to keep pushing the market down, same as you do when it is going up. Okay, that's why you get big swings. Now, if we look here, what are we talking about? Again, I will warn you, if you're one of these people, you hate education, you don't like to learn anything, this is your chance to click off. I take no offense to it, by the way. Okay, I'm just trying to warn you ahead of time so we're not wasting your time. All right, now, the Dow theory is as simple as this right here. And I'll keep it simple because it can be a lot more complicated than this. It emphasizes the importance of confirming market signals between the industrial and transportation averages, i.e. the Dow Jones Industrial Average, the Dow Jones Transportation, which I mentioned to you guys last week. I even did a members video on this one, warning people about it to keep an eye on it. But according to the Dow, for a trend to be considered valid, both averages should move in the same direction, okay? Now, what is the trend here? Here's the Dow Jones Transportation. There's the industrial average below. You've seen both of them now. They're both below the 200. Even the Dow Jones Industrial Average actually come up and reject off its 200. And then they've both broken these trend lines right here, right? So that's one thing we're looking at. We shouldn't be surprised, by the way, because especially when it comes to transportation, as well as talking about last week, what is UPS and FedEx? And you guys have been talking about this comments. What they've been doing, laying off workers. One of you guys was nice enough to share, and I showed it in Saturday's video. Another logistics transportation company goes bankrupt. And then Yellow, of course, the biggest bankrupt we've ever had in the trucking industry was just, 3 months ago? And then you had CSX, I believe it was, and they reported earnings. They talked about a slowdown. And so this is the backbone of the country. And so that's what I'm saying. And I know we go off the SPY, right, as the market of S&P. And then the Qs, of course, because Tech's been leading the way. That's why I'm saying it may be a confirmation from this, right? But that doesn't mean anything. It could be a false signal down. But again, I think you need to know it. I put it out there to you so you're not caught by surprise. And we're going to go into the S&P, and I'll show you that chart as well and what you might see happen, okay? Now, when it comes to yields, this is what has to stop. This is why I say it's something broken behind the wall, and we just can't see it. And what I mean by that, this right here is what you see happening now. The Fed funds rate has not been raised since July. Okay, so August, September, we hadn't raised this month either. We're not going to. But what is yields been doing? Look at that. That is a big spike up. Okay, it doesn't look like much, but remember, the bond market doesn't move like stocks. Okay, big moves down or up is not good for the bond market. They're not used to it. But look, this is normal right here. This is 2018. Pause. Boom. Yields drop. 2008 right here. It either goes flat or down, okay? I don't care where you go. There you can see it. And no matter where you go, that's what's supposed to happen. That is what you see as normal. Now you just don't see that, okay? I mean, you see it right there. I'm telling you, when it's not supposed to be going up like this, especially at this kind of rate. But it's because, honestly, the only thing you can really assess this to is to say it's the first time, as I showed you guys, that when that 30-year bond auction happened and people took pause to say, I don't know if it's even worth the risk. And those yields had to go up to get people to keep buying for our debt here. That's the problem, because maybe for the first time we have reached a certain level at a certain rate where people are just going, oof, hey, I got enough problems in my country, right? And then you got Japan. I mean, they're trying to, when the yen gets beaten down as much as it has, because we have this dollar that's going up too, the US dollar, they have to sell dollar assets, which is their treasuries and their bonds. That's what they're going to do. And when that happens, it's going to force yields up because more supply is hitting the market, right? China, we know what they've been doing. And the problem is the government, you don't hear them talking about cutting anything, right? They're not talking about cutting spending or anything. And so they want more money to spend. And so we're in a weird time. And so just keep all that in mind. I know it's a lot, but, and that's why you're also seeing this. When Bank of America reported earnings, they put this chart out and said, you see where people are in cash, T-bills, things of this nature. It's up to 15%, same as it was in 2020, not as high as 2009, but it's still relatively high compared to other times. And so cash is a position, T-bills, bonds, those are positions to be in. A lot of big money are in those positions, right? And what's leading the market down right now is semiconductors, which you'll see a lot. I don't know if you remember this chart or not, but when it broke down out of here, it came up retested, but you can see it's been in this downward channel right here. And so again, and this is made up of mostly Taiwan semiconductors, definitely NVIDIA, obviously AMD and the others. And they kind of lead the way because everything takes chips and everything. So, we'll have to see. I mean, the government trying to ban chip exports to China, some of that is not helping this whole thing at all either. And then when we add the moving averages in and stuff, I mean, you can see it's not very far. That moving average of 200 will move up and probably hit right where that channel, the bottom of that channel is, if it decides to continue to sell off right there. And it almost lines up too with support. And so you can kind of say, it looks like it's definitely going to head down there some more. So expect, maybe NVIDIA to sell off more, Taiwan Semiconductors, AMD. So watch out for that. And you also have the SOX, so this is the 3-edge leverage ETF, which just broke this October trend line as well. And so a lot of momentum, bearish cross right there on the MACD. A lot of momentum down, being pushed down on these semiconductors. And then we got, and before we continue, guys, please hit that like button there at the bottom. Give it a thumbs up. Helps people find the video. And if you like this kind of content, think about subscribing. I appreciate all you guys' support. The S&P, which we said we would talk about, right? This is actually the market. You can see, I mean, you go to the weekly right here, the 50's crossing the 100. We're sitting right on that 200 moving average. And I told you guys nothing good happens below that right there. And you look back over where it happened before, things are different, right? It's not the same time where you had that 50 crossing 100 right there. We were doing what? We were actually already below the 200 at that point in time. All right, so I don't mean this is going to repeat or anything, but when we move over here and look and bring in these levels right here, because that's the trend line that it broke, right? So October trend line. And kind of the move I would be surprised to see. Usually when you're going to go into a bear market or a real sell-off, you'll see a move back up, right, to suck people in, and it'll break the previous high, maybe even break the two previous highs. And then, boom, you get your big move down, okay? And, of course, that would bring us up. Usually the golden pocket, 0.7, somewhere in that area is where you would get it, right? Because liquidity is just kind of sitting there. And you really want to, remember, big moves, or the algorithm or anything to fill the orders, want to pull people back in. And with a short rally, whatever it is, squeeze them out and then push it down. And where do I get that from? I don't make it up. This just happened in 2022, right? And lower highs and lower lows. And all of a sudden, see that? How we hit the same kind of level and made this big move up right up there to the 0.7 level right there. There's a nice squeezed all the shorts out, everybody else, and then boom, just dropped it like a rock. Okay. If we go back to weekly, I don't care if you use a 30-week, 40-week, 200 moving average. If I use the daily 200 moving average and switch to the weekly, you can use a 30-week moving average too. And I told you, usually what happens if it breaks below it, which is already below the 30-week moving average, it'll come back up to retest and then fail. You see it to the left over there, right? And so, again, we'll have to see. Are we going to break down below that 200 first and then try to move down or not? It doesn't mean we're going into a bear market. I want to make sure I'm very clear about that. This could be a false signal. It could just be the algos, selling people out and they buy back in. Boom, we get the November, December rally up. We'll have to see. But right now, the sellers are in control, okay? Just keep that in mind. Now, when it comes to the NASDAQ, we're 2.5%, 3% above the 200-day moving average because of the Magnificent Seven. You can see those lower highs right there forming. Again, we're sitting right at that same level, though, if you look to the left. And so 50's over the 50, crossing over the 100. Bearish MACD cross. Again, RSI is below 50 on it. And so we'll have to see if this is going to go down to the 200 moving average. And I'll elaborate on that in just a minute. When you go to Tesla, Tesla's one of those ones where it lost its 200. You can see right here a lot of confluence happening in this area between like 200 and 210. It's going to be a battleground. You got your 2023 anchored VWAP right there. You got your moving average. You got your 50 Fibonacci retracement level. You got some support sitting there right around like 200 to 206 right there. But it's definitely, it fell through that volume gap like a knife, didn't it? And so we'll see if that holds. If that does not hold, oh yeah, I mean, this thing is definitely going down to at least 180, 185 for sure. And so just keep that in mind as we go through this and stuff. Again, you expect to bounce at some point in time. If you bring up the RSIs on most of these, they're just way oversold, but that doesn't mean it can't go any lower. Now, BABA and Chinese stocks in general, but this one fell out of this wedge right here. So we got rid of that. We'll keep the bottom line. That'll be resistance. But the big thing, if you're a holder of one of these stocks, especially BABA, it's that area right there. It's the same thing as IWM. Huge demand zone, goes back quite a ways. That's what's got to hold for you. So between like 70 and, I don't know, 90 bucks, somewhere in there, it seems like. Between like 75 to 85 bucks, or the Chinese stocks are even in more trouble. Now, Airbnb, travel, right? We're traveling, but Airbnb stock is getting decimated. I mean, and you can see right here, yeah, it's oversold, all right. But there's a big difference right here. It was bouncing off a trend line. Here, it actually lost a trend line, came back at retested, completely failed, got rejected, and then dropped below its 200. So big difference here. So this one right here, you can see the momentum is terrible. And you see right around 114 is where you really need that bounce. If it falls below that, this one I think is in a heap of trouble. So just kind of, if you own the stock or you're looking to get into it, keep that in mind as well. And then because one of you guys requested GLD, I mean, gold's been on a tear and stuff. But the real big thing about this one, I mean, obviously had, I guess you can call it a double bottom if you want to. But the big thing right here is the supply area up here. It just has a bust through the supply area. I'm not big into gold or anything. But you can see in the supply area goes all the way back to 2011 right there. And so if it can get through that, yeah, I mean, that's a true breakout, But again, we've been here for 12 years. And so until that breaks, I mean, like I said, it doesn't mean anything. It just is what it is. Congratulations who got into it at that point and moved up. But you got to get through that zone right there. Now, earnings, boatload of earnings. Oh, my goodness. All right, we'll just go in the PM for Monday. Cleveland Cliffs, a lot of other smaller companies. Then we're going to have some fun getting into Coca-Cola, Verizon, 3M, ADM, Spotify, GM down there at the bottom. So just a boatload, right? Then this is what we're talking, okay? Tuesday after a market. Oh, boy, Microsoft and Google, all right? Snap, Visa, Teladocs, Texas Instruments. So that is going to be loaded. So expect volatility this week if I didn't say it. Wednesday, Boeing. You got T-Mobile, Hilton, ADP. So those are going to be fun to deal with. Then you're going to have Wednesday, the market's one of the market's favorites, Meta, IBM, ServiceNow, O'Reilly's Auto Parts. All right, so those are going to be big. Thursday, more travel with Royal Caribbean, transportation, UPS, Hershey's. They always brag about trying to mark up the candy bars. I'm a chocolate fiend, that's why I know that. Southwest, more travel there. Then you got Valero, Tractor Supply, Merck. Then that night, Amazon, Enphase, which has been getting obliterated with all solar stocks. Intel, Ford, Chipotle, Capital One. And then we go Friday and we get to hear from all the oil companies, and they can sit there and tell us what they're going to do, if they're going to try to drill more, or what they're going to be doing. Also, you'll have AbbVie, Charter Cable. So that'll be another fun day. And when it comes to economic data, pretty loaded up. Monday, we don't have to worry about it. You do have a Fed board meeting at 8 o'clock, so I wouldn't worry about any of that stuff. Chicago National Fed activity, I don't think anybody's going to really give a crap about that, to be totally honest with you. Tuesday, you'll have the Red Book, and then we're going to have a boatload of S&P Global Composite PMI, manufacturing, services, Richmond Fed manufacturing, Richmond Fed services index happening. I don't think the 2-year note auctions are really doing anything, as people are buying the short-dated bonds with no problem. But again, I'll pay attention to it just for the heck of it for us. Then Wednesday, you have a lot of mortgage data, which, building permit stuff. Guess what? I'm going to say it's going to be really bad. Put in the comments what you think on that. But I think it's going to be really bad. New home sales, stuff like that. Then when you come up there, again, you'll have more auctions. I think they'll go fine because, again, it's short dated compared to the 20 and 30 year. Fed Chair Powell's going to speak after the market. I have no idea what he's talking about that day because, remember, the Fed meeting is next month. Thursday, continuous jobless claims, PCE prices, GDP. And so, again, that was pre-market, so that would definitely dictate where we're going. You can see in GDP, they're expecting to go from 2.1 to 4.2. Oh, my goodness. That's a big jump, isn't it? Initial jobless claims, real consumer spending, inventories. Then you'll have some Fed speakers. Again, pending home sales, I don't think that's going to be good. Again, Kansas City composite and the manufacturing, and then again some short dated bonds. They're talking about here. So I don't think that'll be a problem. Again, if something happens, I'll let you know. Then Friday, finally, we're going to round it up with core PCE and then regular PCE, which, you know, the Fed loves. Personal income month over month, personal spending month over month. Remember, that was better than last time. And then you have Michigan consumer sentiment, which guess what? It's going to be horrible if the market continues to sell off and everything. So understand, just like you saw in 2022, we just played this out. Doesn't mean you still don't have November and December rally just because what always happens, shorts get greedy. The algorithms know that, and they'll trigger some kind of rally up on something, right? The shorts have to get squeezed out. They'll move it back up. And then if sellers are still in control, the market will continue to go back down. It's always happened. Go back and look at the charts. All right. So it doesn't mean we're going to go up again. It's just when is that going to be triggered? Right. At definitely certain levels, which makes sense for it to happen. Right. But again, we have huge earnings coming up. Again, they'll use all that news for what they want to use it for. But I can tell you this. If the Magnificent Seven, they already had Tesla take a dump. If Microsoft takes a dump and on earnings, especially guidance, then yeah, the market's definitely going down more. Okay, so just keep this in mind. If they end up coming out and Googling them and like, oh, great, guidance is good, all that good stuff, then, you know, remember, they have carried the market. That's just the way it is. They've carried the market. So we'll see. Again, those stocks are way up in 2023. So we'll have to see on that one, and we'll have to see if the transportation sector keeps dumping, you know, solar sector. I mean, every sector seems to be dumping at this point in time. Financials, I don't know why anybody would be buying banks, but, you know, maybe they are. It's a beaten down sector, but, you know, that's kind of where we're at and stuff. And we're at kind of this moment where it's like, and that's what I remember I asked this like a year ago. I was like, has the S&P ever rallied without banks and energy? I mean, can they do it? And then all of a sudden energy went on a tear in the middle of the year, but banks are still, I mean, why? They're a mess. So why would you be in that right now? But we'll see. I'm seeing weirder things, right? So let me know what you think down in the comments, guys. Anyway, please hit that like, subscribe button. Really appreciate you. Feel free to try. Take a 7-day free trial on the membership right there. Cheaper than McDonald's combo at $7.99. And you can look at the benefits right there as you can see them. And so I'll see you guys tomorrow, and we'll see how it goes.